Jade Capital Partners midweek report. Hi, my name is Rob Clayton. Well, the Australian dollar, after 6 attempts on the resistance of 76, 70.85, finally managed to break above it today. Now trading at 77 cents. The Australian dollar is starting to become tired. I anticipated a break of 85 to actually see a firm rally, but this has not been produced. Instead, it would seem that the market is not very short up here in terms of the stop losses that were triggered. Therefore, I believe that the market should turn away from around 77.50 and look back towards the downside. Where is the trigger to see the breakdown? I would say it's now around 65, where all these tops and these troughs are. A break of 76.65 would actually see further weakness and re-establish the downside objective of 75.40 to 75.50. The euro now rallying back towards the top side of the range after it fell very heavily on Friday, which is around 111.60. Do note that if we see a break above 111.60, this would trigger further momentum and on towards the target, roughly around about 112.30 to about 112.80, which I do anticipate to see heavy supply returning back there, like before. Looking towards the downside, and if we see a rejection from 111.60, is that we should still see this target I'm holding of 109.50 to 75, which seems to be still playing very well at the moment as a short-term base. Sterling broke through that support of 130, 15.30 level, and now looks for further weakness into towards this week. The view now is that the sterling could actually fall towards a target of 128.45.50, or maybe lower down towards 127 into territory that hasn't seen them since around 1985. Any renewed demand should find now resistance capped around 130.90 to about 131.20. Towards 127, though, we may actually see the Bank of England intervening, because below 127, I view the pound going to a target of 124. But first of all, we'd like to see how 127 to 128 plays out first. Well, dollar yen display of weakness today actually now breaks through the support level of 101.30. This would negate now any bullish attempt and look now for a fall towards the low region of around 100 to about 150. Only a break beneath that level would actually see a target of 98.60. But as you can note, under the 100 level, it hasn't sustained there more than 12 hours and actually recovered very quickly. So it is anticipated we may see the BOJ underneath this region. If we do, we could see the dollar yen power back up towards 103. So in the interim, I'm looking for a 100 to 103 range into this week and next. Very whipsaw price action in gold this week. However, it didn't break beneath the support, which I was viewing at 1,328. And if you look here on the hourlies, you can see here that it respected that level very well, and then demand coming back into the market pushes through the 38 level, and now looking toppy around 13.50 to 55. With extreme, I do expect to see around 13.50.60 to hold, and the risk now is for a pullback towards 13.40, with oscillators now looking high and the trend not overly heating like it was back here when it sold off earlier. But nevertheless, we are looking for this pullback, but not a great not a huge pullback. So the range now into the next coming days should hold around about 13.40 to about 13.60. Well, the SPY comes back rather strong, and as you can see here, it is struggling though to hold up towards that 55 region, 5500 region. After a brief look over there earlier on this week, now looks for the market to fall away. The key level to the downside is 54.45. If we get a breakthrough there, then that would open way towards 53.90 and 53.20. But I suppose that while the S&P is still holding up quite well, I wouldn't rule out one more test up around that 55 region, but unlikely to sustain. I feel the market actually has broken down from the prior week, so this is just a short-term advance, and then get that move back down to 5,300. Well, the S&P trying to claim new highs, only managed to get to an 83, 2183. Still seeing towards that top side of the range of 2180 to 2188 as a short-term cap, and I expect to see the market eventually drop back towards the support, holding around 2158 and firmer at 2138. If we get a move through that level of 38, then it should trigger further weakness and look down towards 2122 as a short-term objective, as you can see here on the dailies. Pretty much where all these tops come in here. Any fresh advances now, I still feel that the market will find supply into uncharted level around 2188. And to finish off with oil, well, respecting that support around that $38 a barrel, demand comes back and reaches now for the objective that was in the report around 43.5. Managing to get to a high of 43.49, pretty much spot on. Weakness is now coming back. I anticipated a break back over this down channel to fuel the move up, but it has not eventuated. And what I'm looking for now is maybe a pullback to around about support of 41.5 in the next couple of hours. Failing to get that, and we still sustain above $42, then we could see eventually a recovery back to around about $44 to $45 a barrel. Well, that's a wrap. Thank you very much for listening, and I hope you enjoy the rest of the week.